this edition of Closing Trades right here on ET Now with me, Asha Faridi, got Snehi Shah with me, and what a bazooka from the RBI. And look how markets have actually moved post the policy, a solid 1% move. We're back to that 25,000 mark, which, by the way, for the longest time was acting as a tough ceiling for the market to actually break. And it's really been all about, the financials which are contributing to today's move. Look at Bajaj Finance. That itself is holding up 5% nearly in trade right now. Shriram is up 4.9%. You've got an Axis Bank, IndusInd Bank, which, by the way, have been laggards vis-a-vis, what an HDFC Bank or an ICICI Bank's performance has been. So they've made a massive comeback. And even some of the beaten down auto majors because of the entire, rare earth magnet issue, Maruti, Hero MotoCorp, these are all stocks which are also, jumping up once again. In fact, within the broader end of the market, the breadth, of course, was positive pretty much from the word go. But IDFC first, 7% of a gap up move. Muthoot Finance up 7%, and we'll tell you why some of these gold finance stocks are holding up. DLF, ICICI GI, Godrej Properties, the rate sensitives as well are looking fairly good. Although, to be fair, realty has been on an upturn, and it was no different even yesterday. So most of these stocks looking good. On the flip side, the weakness today is in largely those global dominated names. A Tata Steel, for instance, 0.5% lower, or for a Bharti, which has already moved up and is consolidating a little bit. Reliance, after its big move yesterday, that's a little bit quiet. Or then, names like Sona, Comstar, etc., which are also a little bit in the red as we speak. Solar Industries, BOB, CG Power, Chumbalfort, these are also some names which are in the red. But lots of news makers today, right, Snehi?
Absolutely, lots. And the focus was entirely on the policy today, and because of that, the sectors that are largely dependent on interest rates that have been in focus today. So anything like a banking and financial, NBFCs, you have insurance. On the flip side, you have realty also that is up and away in today's trading session. Now, the RBI has cut its repo rate by 50 bips, and the biggest beneficiary of this is the entire banking and financial space. So like Asha mentioned, a lot of banks in focus, but particularly gold loan financiers are in focus. We'll be bringing in Varun in a short bit to also help us understand why. But mainly this is because of the LTV, the loan to value rate that has been hiked on loans below 2.5 lakh rupees to 85% from 75% earlier. Big positive coming in for a lot of these gold loan financiers, the likes of Manappuram, Muthoot and IIFL Finance for that matter. But moving away from that, another top sector today is the Nifty real estate pack, because now that the loan rates have gone down, it's going to make taking home loans or credit for buying homes a lot more attractive to people who are seeking the same. So on the back of that, you have Nifty Realty that is doing well, names like Sobha, DLF also on the back of a positive brokerage note. Rather than that, the Nifty Realty sector also holding up pretty smartly in today's trading session. You also have Bharti Hexacom that's in focus. That stock has taken a steep hit in today's trading session, down about 3% right now. At one point of the day, the stock was lower by 5%, seems to have recovered from the day's lowest point, but nonetheless deeply in the red with a 3% cut. This is on the back of a Motilal Oswal note coming in, wherein they have downgraded the stock to a neutral versus a buy, the target price at 1900, and they say that where the stock is valued currently, the risk reward ratio is not favorable for the stock. So that's a lowdown on some of the stocks that are in focus, mostly because of the policy action, but also on the back of a couple of brokerage notes. Okay, but let's also get in conversation with our guests who are joining us on the show. Right now, we have Kunal who's joined us in the studio. And Kunal, a quick take on the markets, the kind of leg up that we've seen after the policy action. We're above 25,000, but barely there right now. How sustainable is this going into next week? Will we be able to sustain these levels for the next hour as well as on Monday when we open?
Not sure the next hour, you might see some bit of profit booking. It will happen because of today's fierce up move. But it should be a sustainable move, because you look at this, that for the last 3 weeks, the indices were almost trading in a band of 300 to 400 points. So such kind of a strong catalyst move, which happens post the news flow on RBI. I think post that we are expecting that the markets would break out of this 400-500 point range. And I think I would probably expect that the markets immediately, I think on Monday or max Tuesday, I think you should see at least a follow-through up move of another 200-250 points further on the indices. And what we are seeing today is again a very classical move. Financials, banking, many of the private sector as well as the PSU names individually. I think these stocks are making a very strong comeback. That was the missing part for the markets. With NBFCs, financial services names, banking, etc., participating, I think there could be a very strong chance that we should see a follow-through up move.
Okay, let's discuss some of those buzzing stocks and gold financiers. They're on a tear. You can't take your eyes off from that. On the back of RBI's announcement, also on gold loan norms, there will be a major revision, including an increase in the loan to value or LTV ratio for loans under 2.5 lakh rupees. Varun is here to break down the math for us and how this really benefits the financiers. Varun?
Well, definitely RBI said that the loan to value for small loans up to 2.5 lakh per borrower, this is the gold loans, the overall LTV would be revised to 85% from 75% earlier, including the interest component. Further, they have also said that there will be no credit appraisal required for such loans. In fact, the end-use monitoring would be required only for loans seeking priority sector benefit. Now, if I give you some of the context, in the month of April, actually, RBI had come out with the draft guidelines, and as per the draft, the overall loan to value was actually capped at 75%, and also the draft rule actually proposed the NBFCs to set the limit on gold loan portfolios. Now that the RBI has said that the overall LTV would be increased to 85%, now this is a big relief for this gold loan companies, because if you look, around 70%, 60 to 70% of the gold borrowers, their borrowing is below 2 lakh, and actually if you look, the average gold loan size is around 1.1 to 1.2 lakh, and no doubt 70 to 75% of the gold loan portfolio is actually in the unorganized market, the gold loan, but the 25% whatever is there, in that Muthoot and Manappuram, these are some of the big players who have actually a big market share. This rule will actually lead to better disbursement. In fact, Morgan Stanley has come out with a note, and they say that this should be a meaningful relief for NBFCs like Muthoot Finance, because with the relaxation applying, more than half of the loan book of Muthoot Finance, and hence they have an equal weight on the stock, and hence after this announcement you are seeing majority of the gold loan financiers, they are buzzing in trade today.
Varun, thanks for all of those details. So clearly Manappuram, Muthoot and IIFL Finance, the biggest beneficiaries of this move. Those stocks are up and away in today's trading session. But let's also go across and revisit the announcement that Governor Sanjay Malhotra made about the final gold loan regulations, and when they're going to be released. That's going to be very soon. They will include raising the loan to value ratio. That's exactly what Varun was talking about right now. But let's go across and listen in to the governor himself.
जो गोल्ड लोन के बारे में जो हमने रेगुलेशंस जारी किए थे वो केवल ड्राफ्ट थे, मसौदा थे, वो फाइनल नहीं थे। आपको ये भी बताना चाहूंगा कि हमने अब एक फ्रेमवर्क रेगुलेशन मेकिंग के लिए हमने एक जारी किया है, जो सबको हमने पब्लिक नोटिस के थ्रू हमने सबको बताया है कि कोई भी मेजर, जब भी हम कोई परिपत्र या रेगुलेशन या डायरेक्शन इशू करेंगे तो उससे पहले हम दो चीजें करेंगे। एक चीज हम कंसल्टेशन करेंगे, दूसरा हम उसका क्या इम्पैक्ट है उसका हम स्टडी करेंगे। तो मेरे ख्याल से आज ही हम जो है उसका फाइनल जो रेगुलेशन है, फाइनल डायरेक्शन है, आज नहीं तो एट द मोस्ट मंडे, सोमवार तक हम उसको जारी कर देंगे। महत्वपूर्ण जो प्रश्न एलटीवी से ही संबंधित है, वो 75% हमने उसमें अभी आज के दिन में हमने ड्राफ्ट डाला था। उस 75% को हम छोटे लोन्स के लिए 85% तक करने का हमारा प्रस्ताव है। 85% छोटे लोन्स के लिए, बिलो 2.5 लाख के लोन्स के लिए पर बोरोवर 85%, लेकिन इस 85% में इंटरेस्ट जो है वो भी इंक्लूड करना होगा।
Okay, that's the reason why those gold financiers are a buzz. But what about the banking play? How does the big chunk or the bazooka coming in from the RBI in terms of a 50 bips cut impact the banking sector and of course PNB in particular? My colleague Ankur Mishra is in conversation right now with Ashok Chandra, MD and CEO of Punjab National Bank. Let's cut across.
In the last 5 months. And the CRR cut definitely, it is a very, very calibrated move by RBI, and we all appreciate the move of RBI. Definitely we will take it forward, and the guidance which is very clear now, growth has to happen in the system, and PNB being one of the largest banks in the country, definitely we are going to play very, very important role in the credit augmentation and credit growth.
Any maths have you done after CRR cut? How much of the funds will be freed?
Yeah, that one calculation we have done. I think that is happening in the phased manner. So around 3,800 crore that will be freed now. And we all know that once that amount is freed, definitely we will be in a position to deploy, because under the CRR we were not getting anything. So I must appreciate the move by RBI, that at the one point they have reduced the repo rate by 50 basis point, and at the same time they have given the cushion for the bank to earn income out of the money which will be freed out of this CRR cut now. So to some extent, definitely whatever the loss that will happen in the net interest income by way of this rate cut, we will be able to compensate by that money which will be free to deploy and earn some income now. So I really appreciate the move now for the industry friendly, for the bankers also, because we also had 1,35,000 crore of corporate loan book sanctioned, which was happened in the last year and in this financial year. So I'm expecting that a lot of offtake will happen out of that book.
Definitely. And you are in Mumbai meeting several investors. What is the story you are telling them? What is the vision you have of bank? Because you have just taken over. If you talk about the last quarter, ROA of over 1%, where do you want to take the bank now?
See, one strategy what we are sharing to all my investors and the analysts today and yesterday also I was there, and almost more than 20 investors I am meeting one-to-one. And there are certain fundamental shift and cultural shift which we are making it in the Punjab National Bank. One is the customer service and customer centricity. That is the topmost agenda for the bank. And for that, one new initiative which the bank has brought in, that is the QR-based customer feedback against the employee. This is the first time any public sector bank has tried, and on a real-time basis, we are able to get the feedback for the service which the customer is enjoying, and he can rate the employee based on the customer feedback. The purpose is that to get the feel of the customer service which is happening in the field. We have 10,189 branches, and what is happening on the real-time basis, I think this one, the systemic change which we have brought in, we are able to get all those feedback on a real-time basis. This will help us in understanding what is the service level is there. There are 5 emojis are there. Once the customer conducts the transaction, then real-time basis he gets one SMS message that Mr. So-and-so, Mrs. So-and-so has done the transaction for you,
right, and
kindly rate them. And then there is a QR code scanning there, he can rate that customer now. He can rate the employee. What we are using it as a system improvement, what are the process improvement which we can do that. Purpose is that only, that how we can make the improvement in the system. So that is going to be a big game changer as far as the customer service is concerned. Definitely. Second aspect, generally public sector bank means we feel that the outlook of the branch will be very, very traditional. So this is one activity which we have started for the last 2 months. Ambience of the branch which we are targeting, and we have done the survey of all my 10,189 branches, put them in the different buckets depending upon their quality and all. And then we are trying to find out what are the improvements that is required. By 30th of June, I think 31% branches are going to be totally renovated. So this is one time frame which we have set up for ourselves, and we want to see that all my 10,189 branches should be world-class environment, so that the employee who is coming in the branch, they should feel enthused to provide the good customer service, and we can attract the good customers also in the branch. So this is these 2 topmost priority which we have set up. That will be the umbrella under which we are going to do the business.
Right. Let's also talk few numbers, because one of the things which has been a concern, especially for banks in this falling interest rate scenario, is the margins protection. How are you addressing that? Do you think today's steps by Reserve Bank of India will help you in that? And garnering deposits is something which is a challenge for banks.
Yeah, see, in the near term, Q1 and Q2, definitely there is going to be some challenges on the NIM front, margin front. But we have built up a very strong treasury book. And we were knowing that the interest rate scenarios are going to come down. So, and we all know that once the interest rate scenarios are down, and if you have a good treasury book, definitely that can supplement the loss or the gap which is happening in the NII and the total income. I can talk about that. So that is going to help me in maintaining the NIM. We have already given the guidance that 2.8 to 2.9 will be our NIM. I think we are going to maintain that. With this cut also, I am very hopeful that we will be able to retain that. Second important thing for the overall the profitability, if I can talk, where will be our ROA. I think 1% guidance we have given, and that also we are going to retain that 1% despite this rate cut, because we are focusing on the recovery. And we have already given the guidance that 16,000 crore will be the total recovery, and within that around 6,000 crore will be our technical right of recovery. So those things from the treasury income and from the recovery from the technical write off and overall recovery, I think we will be able to maintain our ROA of 1%, no doubt about it.
But don't you plan to outperform it, the kind of steps you are taking?
See, in the long run, definitely you will see the PNB on a different trajectory. This is one transition we are doing it now. Even there are some business resig also we are doing it. We had the dependency on the IBPC and pool buyout. So there also we are doing some resigging, and core RAM activity, which is 53% as of now, that we want to improve to 53 to 57%, and corporate book from 47% we want to bring it to 43%. So definitely in the long run, that is going to give me the sustainable profitability, and the sustainable business growth also will happen. So this is one of the strategic shift which we are doing it on the longer run platform. We can talk about that.
Operational efficiency is something which banks are focusing in. I want to understand from you your cost to income ratio. How do you plan to bring it down, and what are the steps you have taken so far?
See, one is the employee cost. So it is we are not going to reduce that employee cost, because that is fixed and that will continue to be there in that. But definitely with the income, we can maintain that cost to income ratio to a lower level now. And for that, lot of activities which we have started in the bank. One is that how we can improve the non-interest income and fee-based income. For that, we have created a separate vertical, cash management services vertical, which my previous organizations, we have done that, and we have made a lot of income out of that. That is a big opportunity for us. So that one vertical which we have created in the bank, and good technology backup is there for that. This vertical is being headed by one general manager. So that is one activity which we have started. We are also going to play very, very important role in the vendor financing and supply chain financing now. That is a very big market, and there are very few players active in the market now. See, going forward in another 2-3 years time, working capital requirements, what I feel is going to come down. That will get replaced with the vendor financing and the supply chain financing. So we thought this is the right time to pitch in the market. It requires a good technology. And today we have built up a good technology, and after doing that, then we are going very, very aggressive with the market.
Right, and as far as lending activity is concerned, how are you seeing the signs on the ground after the quarter results which were declared? Do you think there is a demand of credit?
Demand is already there. See, that's why I told you we have 1,35,000 crore of corporate loan book. Right. Already sanctions are there now. So maybe they were looking for this rate cut and the fine interest rate movement. I think this is the right time for the corporates also. They should look for, and whatever sanctions are there, they should utilize that opportunity. Now, if I can talk about the RAM sector, and particularly about the MSME, there is a big market, and opportunities are there for all the banks to grow in the MSME segment, and we are also going in a very, very big way. For that, we have initiated the digital lending activity up to 25 lakh cash flow based. So earlier what was happening in the MSME also, every bank used to get asked for the income tax return, GST return, all those documents. Today, any the applicant under the MSME, they can go to PNB site and they can apply for that MSME loan, giving his only personal details. No document is required. And within 10 minutes, if he is my existing customer, it takes only 10 minutes. That is the business rule engine which we have built in, and through the fintech, he will get the digital sanction. Digital documentation also we are doing it through NESL. We have made the tie-up arrangement, and then the disbursement also happens through the digital mode. So sitting in the house, the person can get the loan if he is my existing customer within 10 minutes. If he is a new to bank customer also, he can apply that, and it takes only 24 hours to give him the sanction now. Give him or her to the sanctions now. Because there we require the due diligence to be done by the branch official, and immediately after he does the due diligence, the person is going to get that loan now. And 90% of the MSME in the country, they are in this range now, 10 lakh to 25 lakh segment now. So we are going to cater this particular segment in a very, very big way. A lot of MSME outreach activity which we have started, and entire top management, including MD, ED, CGM, GMs from the head office, we have asked them to go out from the cabin and be in the market and canvass the business now. We have 10,200 branches, so we have a big presence across the country, and we are trying to leverage this entire setup to the growth of the MSME sector now.
You have money in hand from Reserve Bank of India. Your intent is there. You have mobilized your branches. Can we expect more business now and better loan growth guidance? I'm not asking for this year, but next 5 years, what is your vision?
See, on 16th and 17th of May, we had the board strategy meet, where 2 days marathon meetings and sessions happened, where we had invited some outside experts also. Considering that entire view, we have chalked out a board approved guidance for the 5 years up to 2030. And I think in all the parameters, bank is going to show tremendous result. If you see my NPA management, it is wonderfully managed now. Our net NPA is 0.4%, gross NPA is 3.95%. So all those things in a time frame, we are going to further improve now. PCR is 97%. Even tangible PCR, excluding that technical write-off, still we are at 90%. We are one of the very few banks having the tangible PCR at 90%. Even the slippages, if I talk about, we had the 0.76% last year. And this year also I am expecting that every quarter my slippage will be around 1,500 to 1,700 crore now. So with all those things and the business side, whatever initiative which we have taken, I am very hopeful that we will be able to grow faster than what the guidance which we have given now. One more thing which I would like to tell you, that, and that is a very, very strategic shift which we have made now in the CASA front. We have revamped our entire CASA products now. So today we have very exclusive product for the salary, non-salary, women, youth, defense, Agniveer. We have exclusive product for the pensioners, senior citizens, and first time we have come out with a unique product for the farmers in the country now. We have made some tie-up arrangement with various agencies, and sector-wise we are providing the add-on facilities to this entire segment now. And we have set up a target of around 50 lakh accounts for this year now. Okay. And this particular revamped schemes are doing very well now. So entire my CASA, the ratios and things definitely in the long run going to improve now. So this is overall changes and improvements which we have brought it in the system.
You mentioned about 5 years plan. I'm very much intrigued to know 5 years from now till 2030, where will be bank's ROA, profitability, other metrics, NPA you already mentioned on downwards trend, and moreover, what will be your run rate of growth?
We are expecting that average growth will be in the range of around 13 to 14% average. Yeah. So, and then you can calculate our ROA and everything. I think with this rate, if the things are happening and the deposit and credit is also growing, I think there will be a good opportunity for everybody to enjoy and everybody to be a part with the growth history of PNB now.
All right, so that is the long-term vision. But in the short term, few blips were there, particularly about one of the legal case which is going on in Supreme Court. Last time when we spoke, there was a chance of applying in Supreme Court. Banks were mulling that. What should we do about it? Now has that been decided? Because Supreme Court has now stayed the proceedings for now. But how banks are pursuing Bhushan Power and Steel?
I think deliberations are happening at the COC level now. And I think another 1 or 2 days we will have the full deliberation and the mandate will come from the COC. What I will suggest that whatever the legal course is required and the law of the land is required to be taken, I think definitely all the banks together giving the mandate to the COC, they will do it.
All right. Thank you so much for talking to us. and it was a pleasure speaking to you, and all the very best for the 4 to 5 years plan, where the bank is expecting 14 to 15% growth.
13 to 14.
13 to 14? Okay. 13 to 14%, and I guess this is a conservative estimate.
We should do that, yeah, definitely. I'm very
13 to
bullish about it.
14% growth expectation is there till 2030, and ROA calculation the viewers can do.
See, I can just tell you before I conclude that, when the vision is there that by 2047, India should be the developed country and we should be in the top 3 countries of the world now. I think definitely PNB being one of the largest banks in the country, we need to play very, very dominant role and very active role. And PNB will play that role. That is the only thing I can tell to all the viewers of your channel. And thank you very much for giving me this opportunity.
Thank you so much for talking to us.
Thank you. Thank you.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
Perhaps we could have seen a much bigger move in autos. But even right now, we're staring at a 3% move for a Maruti. Hero MotoCorp is higher by about over 2%, and the leadership names like M&M also standing tall by a good 2% as well. But the other one, defense, in a fresh bid to make India self-reliant in the defense industry, the government, we understand, is now planning to approve new industrial corridors soon to boost manufacturing via incentives. Prakash Priyadarshi, my colleague, is here with further exclusive details.
Yes, sir. It's a positive development for the defense sector, as we're learning from our sources that the government is likely to approve new defense industrial corridors to boost domestic defense equipment manufacturing. A very significant development coming in. We're given to understand that the government is actively considering proposals for setting up of 2 to 3 new defense industrial corridors in the country. In fact, the Defense Ministry has just started working on the proposal. We're given to understand that the states like Andhra Pradesh, Telangana, Maharashtra and Assam are being considered for the new corridors. Currently, India has 2 notified defense industrial corridors, one in Uttar Pradesh and the other in Tamil Nadu. Both these states have signed more than 250 MOUs so far for defense projects. Incentives, various kind of incentives will be provided for the design, engineering and manufacturing of defense equipments. Manufacturing of missiles, missile system, EVAs, aerospace components, drones, radar systems will get a fresh push. A very significant development coming in as the government is providing an impetus to defense manufacturing and has set a target of rupees 3 lakh crore defense production by 2029.
Okay, Prakash, thanks for all of those details. And that's the exclusive on the defense space right now. On the show now, we're being joined by Ashi Anand, founder and CEO at IME Capital, and also Arpit Beriwal, the manager derivatives at Motilal Oswal Financial Services. Thank you so much for joining us. And Ashi, let's come to you first. My colleague Prakash was just talking about the entire buzz in the defense space that could follow now that we have some exclusive details about the government's moves and plans in this sector. Give us a sense of what you are making of this sector, because a steep run-up followed by a cool-down period is what we've seen on this index. Where do you think Indian defense is headed going ahead?
So hi, firstly, thanks for having me on the show. Defense is very clearly a very interesting theme. Now, what makes defense so interesting is that there is a very, very large scope for value migration away from imports towards domestic manufacturing. India is the largest importer of arms globally, and it's probably one of the only areas where India leads globally in terms of overall spends. Now, this is because we've not really spent on building out our own domestic manufacturing base. And whenever there are conflicts, it is extremely important to have reliance, not to rely on global parties. So I think there is a clear impetus by the kind of government to increase domestic and manufacturing of defense. This is something that they have been working on over the last 2 or 3 years. And you have seen multiple kind of initiatives come in to actually push increase defense indigenization. Now, what makes this kind of theme very attractive is you can actually see very strong growth for the next 10, 15 years just coming in from import substitution on its own. You don't need defense spends on aggregate to actually grow very rapidly for domestic manufacturing of defense to actually grow, because you just have such a large import substitution market. Now, that said, when it comes to kind of playing defense, it is very important to kind of just understand some of the nuances of the space. Some of these projects tend to be extremely lumpy. The timelines can actually move around quite significantly. And valuations have actually also moved up quite considerably. Most defense companies have run up quite considerably over the last few years. So while growth is very, very attractive, I think it's important that investors look at this also bottom up, understand the kind of nuances that exist in each of the companies. So a company like HAL would be very dependent on a couple of projects doing well. Bharat Dynamics does have quite a decent margin volatility. Bharat Electronics may be a lot more diversified. You really need to understand what you want to play. But I think it is one of the more interesting structural kind of growth stories that exist in India today.
Right. Okay. Well, sources are indicating, and as per agencies, that Elon Musk Starlink has finally got its Key India license from the Telecom Ministry. We'll, of course, get more, details in on that. But I'm going to quickly get on board Arpit as well. Arpit, hi. What is it that you're making of not just the Nifty move, but what's happening within the entire rate-sensitive pack? Nifty Realty, banks, which already clocked an all-time high earlier this week, and then the way autos as well are perking up.
Very good afternoon to all. So as we see, this was the trigger that everyone was waiting for. And if we talk about the banking, reality and auto, all three indices were shaping up well. And if we talk about banking as a whole, so definitely banking is leading from the front, hit new life highs, and definitely going forward for next couple of weeks, we can expect good momentum towards 57,000, 58,000 levels positionally. However, looking at the banking space along with the reality pack is quite interesting. So if we talk about the reality pack as a whole, very sharp momentum we have seen, and within that also definitely 5 to 7% upside can be seen in the reality space, likes of Loda, Opera Reality, Macrotech, and a lot. So overall, looking at the space wise, definitely the rate sensitive sectors are in good shape, and next couple of days to weeks time, definitely we can see good uptick going forward.
Okay, so that's the take on some of those names belonging to some of those sectors. But on that note, time now to slip into a very short break, and we'll discuss the last 15 minutes or so of trade when we return. See you soon.
पैसा लगाना है तो सेंचुरी प्राइम क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ, सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
For silver in the last few days. In rupee terms, yes, silver has crossed that 1 lakh mark, and it's come back into lifetime high levels. On dollar terms, silver is still yet to make a life highs, but I think it's almost like a 13-year high for silver on the dollar terms. Now, this is a very interesting chart because for the first time, I think in the last 12 to 13 years, silver has managed to come back into a breakout mode. Why is this important? Because silver at current prices of 36 plus on dollar terms has managed to come back and break out of that major trend line resistance. Every single time, as you can see on the charts, every single time silver prices have managed to break past about the previous resistances, it's been met with a very strong set of momentum and a further move on the upside, which means that even this breakout which we're seeing right now for the silver charts, this should be met with a further round of optimism. The second chart is the most interesting one. We generally talk of gold-silver ratio. So, we looked at the charts for gold-silver ratio over the span of the last 30 to 40 years. And interestingly, there have been two earlier phases when the gold-silver ratio was at its major top. So, both of them are being marked by the arrow points where we can see that the gold ratio topped out, say closer to 100 to 110 kind of a range. There were two, dates for this, 1990 and 2020. We'll look at individually what happened in those years and how, when the ratio topped out, you saw asset classes behaving. So, for example, we see, from 1990 to 1998, the span when the ratio corrected itself from being at an extreme overbought territory to, coming back into neutral territory, we saw silver prices moving 10x. So, almost 2x. So from 3.6, we saw the silver prices moving to 7.25. Gold in that time zone actually corrected from $360 to $288. Now, very similar kind of an outperforming move is what we saw for silver in 2020 onwards. Same ratio charts where silver moved from 12.25 to almost $28 and gold in that time span moved from 1500 to 1675. So gold underperformed silver in both those phases. This is the third time where we are seeing the ratio charts coming back into such kind of a deep overbought territories, which means very strong possibility that from here on to the next 1, 2, 3, 4, 5 years, we should be seeing silver as a strong outperforming class compared to gold.
Okay, so that's very interesting data points put together by Kunal on the rise of silver compared to how gold has performed in the year gone by. But let's also talk about, before we address more on gold and silver and how you should be favoring the metal, I just want to address some updates that we're getting in the telecom space that Aisha marked earlier as well. We understand from agencies that Elon Musk's Starlink has received a key license from India's telecom ministry. This is what we're understanding from agencies at present. Ashi, I want to get your sense on this new foray into the telecom space by a company that is not Indian. We already have a duopoly sort of a situation in the telecom space now. How does this foray change things for the Indian telecom sector?
So while obviously we do need to kind of watch this and see this kind of closely, at this point in time, it's not something that we believe should have too much of an impact. Starlink is going to be focused a lot more on kind of providing data. I think 4G, 5G networks are already fairly well entrenched. The bulk of, if you're looking at kind of data rates in India, they are amongst the kind of cheapest globally by a very wide margin. The ability of kind of Starlink to actually come in and disrupt is not very clear, right? So how a new player would be able to come in and break into this market, right? While obviously there is excitement about Starlink globally, and they can be kind of clear use cases in specific niches, especially industrial and certain kind of cases where intent penetration may not have reached. It's not really something that we see disrupting the kind of incumbents. We believe that there could be a place for Starlink to can come in as a niche player, but we honestly don't see it as having a big disruption on the existing telcos.
Right, okay, that's the take coming in on the entire telecom space. Just looking at the buzzers today, of course, realty is the one which is really standing out. You had a note on, DLF as well earlier today, stating that the management has also highlighted that the company's focus now goes beyond just the headline sales growth. They're going to look at maintaining healthy margins and consequently cash flow generation as well. And that, of course, is coming in from one of the largest realty players in the country. That's DLF. For you, the blended portfolio margins, they're saying that they should trend around 40 to 45%, a combination of uber luxury projects that earn in excess of 60%, while the newer geographies earn a tad lower margins. So that's, the commentary coming in from the DLF management, and that's something that's gone down well with the street. Realty as a pack has been chugging along quite nicely off late, 6.5% off an uptick coming in on DLF as we speak right now, and a solid 4.5% move on the index. But there's also that fillip which is coming from the policy. In fact, we spoke with Niranjan Hiranandani on RBI's rate cut and how that's actually going to move perhaps better realty sales.
Housing where larger amount of loans are taken for a longer period of time and where the interest is reset based on a third party indication, like it has happened in the case of the Reserve Bank of India. It is compulsory for the banks to do so. So in reality, each and every customer who has taken a home loan from banks and financial institutions are going to be benefited, even those who have got past loans. So that's one thing. Second, it becomes an easier one for new purchasers who will find that their budget is fitting into the calculation on the new EMI calculation which is there. So the affordability in respect of home will increase. So that's the second benefit that really takes place.
Okay, so that's the word coming in from a real estate stalwart. That's Mr. Niranjan Hiranandani. But Arpit, I want to get your sense on this space, because for the better part of the year so far, real estate has not done all that much. Q4 in terms of fundamentals also largely mixed. But on the technicals, does this recent run-up over the last fortnight or so seem like too much too soon? Or do you think this is sustainable going ahead as well?
We're talking reality index as a whole. From last couple of months, we've seen a good pullback from the lower levels. But if we see the bigger time structure, so some September series, we have seen a decent correction and almost stock corrected by 30 to 35%. But going forward, I think looking at the chart setup wise, definitely there would be few pockets that can outperform from here on also. So a couple of counters that are looking very promising on the chart would be Loda, that we still see that from next 2 to 3 months perspective, we can see good momentum, especially in top 3 counters such as Loda. We can see good momentum towards 1800 and 1900 plus levels. Second would be the DLF. As we already talked about DLF, the stock corrected from the higher levels, but good recovery was seen from the lower levels, and now the stock can head back to its 950,000 levels. And third would be the Oberoi Realty. So Oberoi Realty stock corrected really well from the high levels. So on the monthly scale, I think the base formation has been done, and slowly, steadily, the stock can head back towards 2100, 2200. So I think there is some more steam left in this space as a whole, and next 2 to 3 months would be quite exciting for this sector.
Okay, that's the take coming in on realty. But Arpit, would you have any BTST ideas that our viewers could pick on?
So as we're discussing about the realty, the first idea would be from the realty pack as a whole. That would be Oberoi Realty. So classical range breakout on the daily and the weekly scale. Strong momentum seen across the day, managed to close above its crucial hurdle zone, strong bullish candle. So Oberoi would be a first pick with keeping stop loss of 1830 for an upside move towards 2000. And second would be from the banking space, that is a private bank space, SGFC Bank. A classical range breakout on the weekly scale after 6 weeks, strong bullish candle at life high daily. So slowly we can see move towards 2050 to new life high. So this would be our 2 picks for the BTC trade.
So HDFC Bank and Oberoi Realty. So Arpit continues to be bullish on the realty space, and Oberoi Realty is his way of playing the space. But actually, coming to you, talk to us about Nifty Metal, because after a 9.5% move in realty on a week-to-date basis, you have Nifty Metal that comes second with a 2.5% uptick. But nonetheless, it's the second top sectoral gainer over the course of the week. Give us a sense of what you are making of this sector. Lots of news flow coming in from various parts of the world that could act as a potential overhang. So what's the view here?
So metals is actually a space that we would probably stay away from. Now, the main reason for this is it's important to understand that metal prices are the most important driver of earnings in these companies. And the metal prices are going to be driven by global demand and supply dynamics. With all the kind of uncertainty that we're currently seeing globally, right? With kind of Trump tariffs, uncertainty around the US economic outlook, China itself, which is a very important driver of metal demand globally, has not really been doing very well. It's quite difficult to actually create a case for a longer bull cycle in metal prices in a kind of overall environment where you are struggling to kind of see demand and growth. So I think metals could has smaller, shorter trading plays, but just as a structural call, it's actually a place we'd stay well away from until such time as we either don't see much greater signs of a longer, more structural global demand recovery, or something quite significant happening in terms of the supply side and more in terms of supply side disruptions.
Right, okay. That's the take coming in right now on where seeing the market texture headed. But Kunal, what about your BTST ideas?
So I'll go with 2 buy calls. The first one is actually on L&T Finance, and after quite some time the stock making a comeback, was also one of the buy calls in the morning today, but would want to retrade a buy over here at current levels, even after 3%, 4% kind of an uptick today. Revised targets on the upside could be kept at closer to 198, stop loss trail to 184, and REC Limited, and after almost like 3 or 4 weeks of a huge underperformance, the stock looks to be on a strong breakout mode, at least on the short-term charts, and this could potentially be a big turnaround point for REC Limited over the near to medium term. So would go for a contra buy over here, targets of 440, stop us at 406.
Okay, so Kunal continues to be very bullish on L&T Finance, and REC is his second pick. But on that note, we'll slip into a very short break and be right back to sum up the market session just on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I'm here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
It's negligible given how fabulous the rally in the stock has been. HDFC Life, Tata Steel, Bharti, Reliance, HCL Technologies, Tata Motors, these have been the relative underperformers today. Kunal, come next week, do you sense that the rally in banks and perhaps the other rate sensitives like, maybe real estate would continue?
Yeah, I think it should continue because it's come at a time when the markets required many of these sectors to break out, and it's a very good sign that these stocks have gone through a good patch of consolidation, and the consolidation was very, very restricted towards a narrow range for these names, and eventually we've seen that whenever stocks come back into a trading band, breakout generally unfolds into at least 3-4 days of a consecutive price uptick. I'm not sure whether we may probably expect a similar kind of an 800 to 900 point jump in the Bank Nifty, but at least another 200 point to 50 points on the upside is what I would expect the Bank Nifty to move towards in the subsequent next 2-3 days. And also I think what we are also seeing is that many of these stocks have seen a very strong jump of volumes. They are closing almost closer to their intraday highs, so which means traders are carrying long positions into these names, and that generally is a indicator that these stocks would probably see a good start of the trading for the next week.
Kunal's take on where we can expect the market to head next week. But on that note, Kunal, Ashi and Arpit, thanks so much for joining us on the show. Let me hand it over to my colleague Shrishti, who's here to sum up the day as well as the week's market moves that we've seen. Shrishti.
Well, yes, what a thumping victory for the markets, and all thanks to the RBI decision, not just on the rate cut, but also the cut that they have announced in the CRR rates. And yes, the banks were leading it from the front because it was a record high day and a record breaking day rather for the Nifty Bank. We have scaled past that 56,650 marks. That's the new ballpark number that we will be working with when it comes to the banking index. A lot of movers in the banking index, but specifically for the week, if we have to look at some of the winners, then it has to be IDFC First Bank as well as AU Small Finance Bank. These were the top gainers, and today we have seen some of these large cap names like Axis, Kotak, they were actually inching higher. But when it comes to Nifty, we have once again scaled past that number of 25,000. More than 250 points of gain on Friday itself is what we have witnessed. And in the Nifty, some moves were also led by Reliance as well, because that counter is once again seen to be back in the flavor. But if we have to talk about some of the winners, then it will be Eternal leading it all the way for this particular week. What great moves we have seen on that counter. But for Eternal, we also had a bullish note from CLSA that on one day single itself on Thursday we have seen a 5% jump. Other than that, it was Shriram Finance that did get that boost with that rate cut announcement. All the NBFCs were doing well, but Shriram Finance was actually the biggest winner, one of the biggest winner rather, when it comes to the Nifty 50 gainer on the weekly side. Other than that, let's shift focus to the mid-cap space, because Nifty mid-cap did advance for the second week, and in that, Cochin Shipyard and Prestige Estates were the leaders, and Realty Pack was left no behind after that booster that was announced, because Nifty Realty was the top sectoral gainer this week, advanced for the fourth consecutive week, and in that, Brigade, Shobha, they were the stocks that were leading it from the front. Other than that, it was the metal pack that was up over 2%. PSU banking index was seen to be advancing. Nifty Financial Services Index too at a record high level, and Nifty Auto did snap the 2-week losing streak led by Bharat Forge as well as M&M. So the list is long and I could go on and on, but the crunch of the matter is that yes, it's a record high coming in for the Nifty Bank, and Nifty managed to scale past that level of 25,000 mark in this particular week. So definitely a strong closing for the Indian markets in this week. Back to you.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
the stakes are high and the answers are elusive. There's one voice